Right now, while you're watching this, the global economy is quietly bleeding $500 million every single day. Not per month, not per quarter, per day. And almost nobody fully understands what that actually means yet. Because what you're seeing right now, higher gas prices, expensive groceries, market volatility, that's not the crisis. That's just the first signal. The real damage, it's already in motion. It's already locked in. And most people won't recognize it until it's already inside their bank account. So let me ask you something before we go deeper. When you heard oil prices were rising, did your mind connect everything that comes next? Or did you just think, gas is expensive, we'll manage? Because that single thought might be the most expensive mistake you make this year. Since the escalation involving Iran, global oil prices have surged over 50%. The Strait of Hormuz, a narrow channel responsible for roughly 20% of the world's oil and gas flow, has effectively been disrupted. This isn't just another headline. This is the artery of global energy being squeezed. Brent crude jumped from around $70 to over $110 per barrel in weeks. And yes, you see it at the pump. But hear what nobody is explaining properly. This is not one price increase. It's a chain reaction. A rolling sequence of economic shocks that hit in waves. Each one delayed. Each one is bigger. Each one harder to escape. There are 5 waves coming. And by the time most people realize all 5, it's already too late to prepare. Gas prices spike first. It's immediate, visible, emotional. The average household suddenly pays more every week. $10, $15, maybe $20 extra. And your brain does something subtle but dangerous. It says, annoying but manageable. And that's where the problem begins. Because your brain doesn't evaluate total financial impact logically. It uses something called mental accounting. It separates your money into invisible buckets. Gas, groceries, entertainment, savings. So when one bucket overflows, you don't rebalance strategically. You react emotionally. You cut. Dining out. Subscriptions. Investments. Experiences. Not because those got expensive, but because your brain quietly labeled them non-essential for survival. Now let me ask you, what's the first thing you would cut if your expenses suddenly jumped? Comment below, I'm genuinely curious. Because of that decision is exactly where the next phase begins. Here where it gets more serious. Diesel prices have surged dramatically. And diesel is not optional. It powers drugs, shipping, refrigeration. Every piece of food you buy travels on diesel, especially perishables. Milk, meat, vegetables. Now here's the dangerous part. Retailers don't raise prices instantly. They absorb the cost first. Why? Because they don't want to scare you. But right now, they've already been absorbing costs from tariffs, inflation, and supply chain stress. There's no margin left. So what happens next? Prices don't rise gradually. They snap upward. Fast. Unexpectedly. And by the time you notice, it feels like everything got expensive overnight. This is the one almost nobody is thinking about. And it's the one that should concern you the most. Fertilizer production depends heavily on fossil fuels. Up to 80% of its cost comes from energy. And a massive portion of global fertilizer supply flows through the same region currently disrupted. Here's the scary part. This wave has a delay. Farmers are paying higher costs right now. But you won't feel it until months later, when food hits shelves in September, October, beyond. By then, the damage is already baked in, and nobody connects it back to today. Let me ask you something. How many economic problems have hit you in the past that were actually caused months earlier? That's exactly how this one works. Jet fuel has surged nearly 85%. Airlines don't adjust prices daily like gas stations. They price months ahead, which means expensive flights are already locked in. Even if oil drops tomorrow, you're still paying more. Vacations get delayed. Travel gets cut. Experiences disappear. And remember what we said earlier. Experiences are always the first casualties. This is where things move from annoying to structural. The expectation was simple. Interest rates would fall. Borrowing would get cheaper. Relief would come. That expectation is now broken. Why? Because energy-driven inflation changes everything. Central banks are trapped. Cut rates, right arrow, inflation gets worse. Raise rates, right arrow, economy slows. There's no clean solution. And when uncertainty rises, people freeze. They delay. Buying homes. Starting businesses. Investing. And when millions of people pause at once, the entire economy slows down. Now here's the uncomfortable truth. The biggest risk right now is not oil. It's not inflation. It's not even the market. It's your own psychology. There's a concept called anchoring bias. Your brain grabs one visible number, gas prices, and uses it as a shortcut to represent the entire situation. So if gas feels survivable, you assume everything is. But it's not. In that gap between reality and perception is where people lose money. Markets are already reacting. Major indexes are falling. Volatility is rising. Fear is spreading. And your brain does something primal. It screams, sell, protect yourself. This is called loss aversion. Losses feel twice as painful as gains feel good. So a small drop feels like an emergency. But history shows something uncomfortable. During geopolitical shocks, markets fall briefly, then recover, then climb. And the people who panic, they lock in losses. The people who stay, they capture recovery. Let me ask you, if the market dropped 10% tomorrow, would you buy more or sell? Be honest, drop it in the comments. Because that answer determines your financial future more than any headline. There's one scenario economists fear the most. Stagflation. Rising prices. Slowing growth. This is the hardest environment to escape. It has happened before. 1973 oil crisis. 1979 shock. Pre-2008 spike. Every major oil shock has historically been followed by economic pain. And if oil climbs higher, we move from inconvenience to systemic damage. Now let's shift from fear to control. Because the people who come out ahead in crises aren't the smartest. They're the fastest to adjust. 1. Don't panic. Sell. Moving to cash feels safe. It's not. You're trading market risk for inflation risk and missed opportunity. 2. Strengthen your emergency fund. Aim for 6-12 months. Not just for money, but for psychological stability. Because calm decisions create better outcomes. 3. Cut early, not late. Don't wait for all waves to hit. Act now. Small adjustments today prevent large pain tomorrow. 4. Keep investing. This feels wrong, but it's historically right. Volatility equals opportunity. You're buying assets at a discount. 5. Reduce high-interest debt. Rates aren't falling soon. Every month you delay costs you more. 6. Map your exposure. Long commute. High fuel usage. Business logistics. Just before the costs compound. Here, what separates winners from everyone else? It's not income. It's not intelligence. It's response time. The people who adjust early win quietly. The people who wait pay loudly. Right now, you have something most people don't. Awareness before impact. Most people will realize what's happening when it's already too late. But your window is still open. So here's my question for you. What's the first move you're going to make after this video? Drop it in the comments, I read them. And if this video changed how you see the next few months, hit like so more people actually wake up before it hits them. And if you want content that doesn't just explain money, but exposes how the system actually works, subscribe now. Because of this story, it's just getting started. And the next wave is already on its way.